I think you have to distinguish two things. First of all, as you mentioned, the underlying markets, meaning new build, renovation and infrastructure, will soften in 2023 because of inflation still on a pretty high level with about 10% and rising interest rates. And we will see rising interest rates throughout the year. We have not reached yet the top. So obviously the influence on the real estate sector will be there, and we will see this, and we already see it, by the way, in Europe and in the US. So this year will be, I call it a bumpy road for the market. However, and this is the second part, Wienerberger with its solution business and with innovation will see growth.
Yeah, and that's something that you've tried hard to do, I think, is to spread your bets a little more widely and bring some diversification into the group. Could you just put a bit more colour onto that and how you think the relative businesses are going to perform?
Well, if you look at us today, we are a leading company when it comes to renovation on the roof, or in the facade, or in the new build when it comes to energy efficient housing. So therefore, when markets go down by 10%, as they did, by the way, in 2022, you see that we are growing and outperforming local markets because customers in the US and in Europe buy our solutions because they are affordable, they are long lasting and they are efficient.
Heimo, we've been talking on the channel about this big theme of reshoring, homeshoring, friendshoring, and I can see in the results inventories increased significantly in both value and quantity, and that in some countries you're just keeping more stock. Just walk us through some of the developments you're seeing around supply chains and why it's necessary to have more inventories at hand.
The stock level has increased on value base very much because if you have cost inflation nearly at 20%, obviously the value increases dramatically. If you look close at our numbers, you see that the level of inventory in size and numbers has not increased that much because obviously it's a single-digit growth. And keep in mind that obviously you need, as a building material producer, certain stock levels because nobody in the value chain keeps stock. Yeah? So when we have stock levels today about a month or a month and a half, it's not enough for a building season that starts in about a month's time. So usually you should have 3 months. So 2022 has been a great year. So we are building a little bit of stock, but not terribly.
What's the impact then on the cost side? Because not exactly a small inventory here as you're housing more bricks in storage. What's the impact on the cost side?
It's not huge. Actually, it's a couple of percentage points and to be neglected, if I may say so.
Speaking of cost, can I ask you then about inflation? Because we've seen so many inputs rise over the last 12 months or so. We've got this reopening theme out of China. What's the inflation side looking like at this point?
At this point, our inflation for Wienerberger, meaning what we buy and how our value chains are set up, we will see about 10% of cost inflation this year, coming mostly from the wage side, by the way, personnel cost increases.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.